All right, so you send over some info about financial statements and management accounts. And I got to admit, it's a little confusing. They both have to do with a company's finances, but they seem so different.
We've hit on something really interesting. Even though they both deal with a company's finances, they have totally different purposes.
So it's kind of like one is for show and the other one is how things really work. What's the main difference here?
The biggest difference is who they're for. Financial statements are for the outside world, investors, lenders, regulators, anyone outside the company.
So it's all about being transparent, making sure the public has the information.
Exactly. And so everyone's on the same page. These statements have to follow really strict rules. It's like everyone is speaking the same financial language. Like here in Singapore, companies have to follow the Singapore Financial Reporting Standards, or SFRS, which are actually based on the International Financial Reporting Standards, IFRS.
So there's like a common set of rules so everyone knows what the numbers mean.
Exactly. That way, it's super easy to compare different companies and make good decisions.
That makes sense. So then where do management accounts fit in? Are those public too?
Nope, not at all. Management accounts are completely internal. Only company managers and executives use them to make decisions and run the business.
So if financial statements are for the public, management accounts are like the company's secret recipe.
I like that analogy. It's like their secret weapon. They can track all sorts of things that wouldn't make any sense to people outside the company.
So a company has to make financial statements, but management accounts are just whatever information the company needs to run smoothly.
You got it. Financial statements are like the big picture. And management accounts are all the little details. They help managers track performance and make strategic decisions.
Okay, I think I'm starting to get it. But can we get a little more specific? What kind of stuff is actually in these reports?
Well, for financial statements, there are some key things. You'll always have the balance sheet, the income statement, and the cash flow statement.
Those are the ones that are standard.
Right. They give you a snapshot of all the important stuff. The company's assets, liabilities, income, expenses, and cash flow.
So it's a really broad look at how the company is doing financially.
Exactly. And remember, it has to be standardized so everyone can understand it.
Makes sense. So what about the management accounts? What kind of information is in those?
That's where it gets really interesting, because management accounts can be totally different for each company. They might include things like departmental reports, breaking down the performance of each part of the company, or they might focus on key performance indicators, or KPIs, that are specific to the company's goals.
So it's not just what they report, it's how they report it.
Exactly. And another big difference is how often they're updated. Management accounts need to be up to date, so managers can make quick decisions. Imagine if you were running a marketing campaign and you had to wait months to find out if it was working.
You'd waste so much time and money.
Ex-
So we're starting to see the big picture here. Financial statements are public, standardized, and give a broad overview. And management accounts are internal, flexible, and give more detailed information.
You got it. It's like the difference between a public announcement and a private strategy meeting.
This is really helpful. I'm starting to understand why both types of reports are important. Financial statements show everyone how the company is doing overall, and management accounts help the people inside the company make good decisions. This has been a super interesting conversation. I feel like I have much better understanding of how financial statements and management accounts work together.
Me too. It's been fun.
Well, that's about all the time we have for today. Any final thoughts?
I guess I would just say that whether you're an investor or a manager, it's really important to understand how to read and interpret financial information. It can help you make better decisions and understand how businesses really work.
Great advice. Thanks so much for joining me today.
It was my pleasure.
And to all our listeners out there, keep learning and keep exploring the world of finance. We'll see you next time.